Now, let us take the examples of cost plus contract. In case of cost plus contract, there is a term and condition which is involved. That is, ABC Limited's profit, whatever is there, it is agreed at 25% of the contract cost. So now, whatever cost is there, so this is profit is what? 25% of cost, right? So now expected cost, whatever is there, it cannot exceed 22 crores. So whatever cost you are expecting, it cannot exceed 22 crores. That is the cost or 22 crores, whichever is lower. On that you can charge the profit. For example, if the cost is 15 crores, now 15 crores or 22 crores, whichever is lower is 15 crores. Okay, so now on this I need to charge the profit percentage. Now if the cost goes up to what is the profit percentage? So profit percentage is 25%, right? So 15 plus 25%, that is 18.75 crores I can charge. So now if it is like 25 crores, so now 25 crores or 22 crores, whichever is lower. So now I'll charge the profit on 22 crores. So how much it will be? 22 crores. Now 27.50 crores. So this is the profit, the cost plus uh, profit, right? So now I can only charge up to 22 crores. Even if the expected cost is 25 crores, I have to charge the profit on 22 crores. Now there comes percentage of completion method. So what happens in percentage of completion method is, so based on the completion of the project, you recognize the revenue as well as corresponding cost. So it is just based on the estimate. So revenues, whatever is there, should be matched with the cost. Now, if there is a instance wherein the total cost is expected to increase the total contract revenue, then loss, whatever is there, that will be recognized immediately. So now, why is it recognized? It is recognized because of the prudence which is involved. So because of the prudence concept which is involved, we recognize the loss then and there itself. So you might tell, like, if the company is making if the companies knows that they are going to incur into losses, then why they enter into such contract? Or there are escalation clauses. So or there is an instance that they might claim from the company. Then also how they incur the loss. So they incur the loss because probably there is no escalation clause which is involved, or the amount which is made in the claim you cannot recover it, or the company is entering into, like, it wants to penetrate into market. For example, you are new to the market. Now what happens is, you want to provide a good quality of the services initially so that your brand is established. So now in such cases what happens is, basically you are giving a good quality of services at a reasonable level of cost. Probably you don't keep any margin or a reasonable level of margin. So here what happens is, whatever a loss making contract is a contract where there is a loss, that is cost is exceeding, there is no margin which is kept, the cost is exceeding. So then in such cases what you do is, you recognize the loss then and there itself. So now if you know the final outcome of the contract, so then in such cases what happens is, basically you recognize the proportionate revenue as well as proportionate cost, whatever is it that you recognize. So now you cannot estimate it properly. So now what will happen is, revenue, whatever is there, you will take revenue to the extent of cost. For example, you have incurred 100 of cost, 100 like 1 cr of cost, you assume. So now what happens is, you need to recognize revenue to the extent of 1 cr. So otherwise in this case, what will happen is, basically you assume that there is the whatever 25% completion rate is there, to the extent of that cost will recognize, and to the extent of that revenue will recognize. So basically whatever revenues are there, to the basis of on the basis of the percentage of completion, you recognize the revenue as well as you recognize the cost. Now if this what is the final outcome you cannot uh, like cannot be reasonably estimated, then in such cases whatever is there, no contract cost whatever is there, it should be recognized as an expense in the period in which they are incurred. Okay, so whenever cost is there, cost as and when it is incurred, you recognize it. And also whatever expected loss is there in the contract, that should be recognized then and there. So this happens, the loss making contract happens only if there is if the final outcome you cannot measure the final outcome. So then in such cases, this instance of loss making contract rises. Now they have given that X Limited commenced the construction contract on 1/4/2001. So fixed price agreed, fixed contract price is how much? That is 2 lakhs, right? So it is 2 lakhs. The company has incurred 81,000 in 1/2 for 45% and has received 79,000. So now we need the cost incurred in 2/3, that is in next year, it is 89,000 to complete the rest of the work. So rest of the work is how much? That is 55% work. Rest of the remaining work to complete, they have incurred 89,000. Show the extract of the profit and loss account and the customer's account. So now in the profit and loss account, what you do is, so basically the contract price, so revenue is how much? So basically 2 lakh into 45%, that is 90,000 whatever is there, that is the contract price. So now what is the contract cost? So contract cost is how much? 81,000. So you recognize the 81,000 amount. Now you if you cannot reliably estimate the um, estimate the amount of the amount, like if you cannot estimate the revenue whatever is involved, so now outcome of the contract, so if you cannot measure the outcome of the contract, then in such cases whatever cost is incurred, to that extent you need to recognize the revenue. Okay, so now you earn net profit here. So next what happens is, basically next 55%, so that is 2 lakhs into 55%, that is 1,10,000. So that is the contract price for the next year, and they have also told 89,000. So you need to recognize 89,000 and then profit you need to recognize. So next you need to prepare the customer's account. So from the customer you have got 79,000, right? So that 79,000 you need to recognize, and the contract price whatever is there, this 90, so it will be shown here. Then balance, that is whatever payable is there, so that this much is the payable from the customer. So you have to receive so much from the customer. So now what happens is, you need to bring the balance, then contract price is so much, and then from the bank, like from the customer, you will receive 1,21,000. So next what we have is, so basically PQ Associates. So PQ and Associates undertake the construction contract, the details of which are provided below. So basically the contract value is so much, cost incurred is 3 lakhs, estimated future cost of completion is 30 lakhs. Now work completed is how much? 10%. The work has started some time ago and there is uncertainty. So whenever there is uncertainty with respect to final outcome of the contract, then in such cases you can measure cost is equal to revenue, provided you can recover those costs. Okay, so if you should be able to realize the cost whatever is there, and also it has been incurred, the cost whatever is there, it should be incurred. So if these conditions are satisfied, then you can recognize the cost equal to the revenue. So basically PQ is certain that it would be able to recover the cost incurred till date. So now what is the cost incurred till date? That is 3 lakhs. So now whatever revenue is there, that will be recognized to the extent of cost. So the profit will be nil. So suppose if there is any loss, expected loss is there, you can recognize the expected loss in this year itself. So they have not mentioned anything with respect to the expected loss, so that will be uh, a loss will not be recognized. So now, basically what happens is contract revenue as well as contract cost, whatever is there, contract revenue as well as contract cost, so will be recognized in the accounting period in which the work is performed. Suppose there are costs which will be incurred in the future. So now what will happen is, if you have any reasonable certainty with respect to the recovery of those costs, then in such cases you can recognize the cost as the asset in the um, balance sheet. Okay, provided it is probable that there is a recoverability with respect to that which is happening. Now, where you recognize 90 crores as, so example, you recognize 90,000 as revenue. Okay, so 81,000 as contract cost. Now, there is an uncertainty with respect to 9,000 of the revenue. Okay, so now you can't adjust this 90,000 by a way of deduction, that is 81,000. However, you need to recognize this 9,000 as cost. So you need to recognize this 9,000 as cost. Now, here what they have told is, so basically in the books of the contractor, in respect of the following data for the year 1. So contract price is how much? 600. Cost incurred till date is 390. So basically, if I take year 1, year 2, okay, so year 2 cumulated. So if I take like this, so now contract price is how much? It is, so now here if I take for the year end, cost incurred is how much? 390. Okay, so assume the contract is for 2 years, the contract is 100% completed by year 2. So basically 100%, the actual cost incurred is same as total estimated cost to complete. So basically estimated cost is how much? 260 to complete, right? So basically 260 I will take into consideration here. Okay, so this is cost. Okay, so now what is revenue? So revenue, what I need to do is, so basically 390 divided by 260 plus 390. So how much it will be? Percentage of completion is 60%, 40%, cumulative is 100% will be covered. Okay, so basically here what happens is, so if it is 60% complete, now what I need to do is, I need to recognize the revenue. So revenue, how much I can recognize it? So basically the 600 is the contract price into 60%. So I can recognize 360 here, and in the next year, that is 600 into 40%, that is I can recognize 240 here. Now, since 650 whatever is there, 650 is the cost, right? So 650 whatever is there, the revenue is 650. So this is a loss making contract. So since it is a loss making contract, what I need to do is, I need to recognize the loss in the year, in the first year itself. So I can't take the proportionate amount, that is 60%, I'm not going to take. So basically whatever loss is there, that I need to recognize in the year itself as a matter of prudence. So I'm recognizing 50. Okay, so now there is a balances the provision for the loss, so that I'm going to recognize. So basically this 390 minus 360, so that is 30, right? So whatever 30 is there, that is actual loss whatever is incurred for the year. So for the remaining loss, that is 20, I need to I'm going to create a provision. So this provision whatever is there, in the next year it will get reversed. Okay, so basically what will happen next year, it is construction cost is 260 and then contract price is 240. So whatever loss is there, that will get reversed. Now the contract price is how much? So basically the contract price is 1000, right? So now work certified on the contract is how much? 500. So work yet to be certified for the cost incurred is how much? 105. So basically, 605, to the extent of 605, work has been completed. Okay, so work has been completed. So now, what is the further work which needs to be completed? That is 405. So now, if I add all these, how much I get is 1100. So this is the cost incurred. So now what has happened is, so what is the contract price? Contract price is 1000. So now 1000 minus 1100. Okay, so now there is a loss on the contract. What you need to do? You need to recognize the provision for the provision, as well as you need to recognize the loss for it. Okay, so now let us see the percentage of completion. So percentage of completion is 605 divided by the 1100, whatever is there, how much we get? That is 55% of the work is completed, right? So now 55% of the work is completed. So what is the contract price? That is 1000 into 55%. So to the extent of 550, I can recognize the revenue. So now they have told progress payment received is 400 and to be received is 540. Now um, now what has happened is, so basically 605 is the amount, right? 605 is the amount, right? So out of which there is a loss of 100. Okay, so now there is a progress payment, whatever is there, that whatever is received, that I need to deduct. So then 140 I need to deduct. So 35, whatever amount is there, that is due from the customer. So basically 35 lakhs will be shown as a liability, so it is a due to the customer. So now here what has happened is, on on 1st December 2001, so 1st December 2001, Vishwakarma Construction Company Limited undertook a contract to construct a building for 85 lakhs. On 31st March 2002, the company found that it had already spent 64 lakh 99,000 on the construction. Okay, so cost incurred till 31st March is 64 lakh 99,000. So now prudent estimate of the additional cost of completion is 32. So estimate of the cost is 32 lakh 1,000. So what should be the amount which should be recognized in the statement of profit and loss for the year ended 31st March 2002 as per the provisions of accounting standard 7. So now 97 lakhs. So now what has happened is, basically contract price is how much? That is 85 lakhs. So whatever cost is there, that is exceeding the contract price. So hence what you have to do is, you have to recognize the losses to the extent of 12 lakhs. So that loss you need to recognize immediately. So now what is the proportion of the contract which is completed? So that is 64 lakh 99,000 divided by the total cost, which total cost, that is the estimated cost plus the actual cost incurred till date, that is 67% is the cost which 67% is the proportion of the contract that is completed. So next what we have is 85 lakhs. On that I need to recognize 67,000 67%. So I will get 56 lakh 95,000. So basically what I need to recognize is, I need to recognize the revenues, then losses. So losses, so basically provision for the losses 3,96,000. So like this the recognition happens.